Hi guys, this is Robert Rivera with Trend Trading Academy, and this is the weekly recap. This is episode 18, I believe, and it's going to be short and sweet. I only sent, actually I sent 5 trade setups, but one of them, the very first one, did not break out. So we won't be talking much about that one. And then I'll give you the projections for the coming week from what we see in the DB pairs that I usually trade. Okay, let's go to share screen right away. Oh, that's not the screen I want to share. Let's eliminate that. Let's stop that. All right. And let's share this screen. There you go. All right. So we started the week with this GCAD, which we had nicely trapped between these two prices. Very nice. We have a golden zone right below it. We can see how it reacted right at the edge of the 61.8. That's something to keep an eye on because there's that rebound from the 61.8 is pretty consistent. The first touch at the 61.8 is pretty consistent. And this time, it was a lot of pips to the upside. Okay, so that is something to look forward to and perhaps take advantage of. Perhaps you can develop a strategy around that if you like the Fibonacci's, and if that speaks to you, you will see that over and over in the setups. But this setup did not break out. So I just stayed ranging between the zones. So I readjusted it the next day. Basically just brought it back in a little deeper, recreated the golden zone based on the new highs and lows, and this is the setup. Again, a little tighter, and oh, well, that's that golden zone. That's that same golden zone. I just made it, I brought the top down, is what I did. I brought the top down to where the price was acting and crunched it down. The golden zone remains the same. All right, this is what we ended up with. Nice break and retest. This is what I want you to notice on these. It broke out. This is our breakout, right? And then it went back up to retest the zone. It did go back all the way in here, which if depending on when you entered, you got a 9 pip drawdown, depending on when you entered for the retest. But my preferred entry for everybody is after the wick. After you see that wick, just like these over here. Okay, after you see the wick, that is the time to enter. Once it comes back into the zone, you're good for the sell. That was 49 pips with the break and retest. And also we have the rejection of the 50 moving average over here, which is another potential entry. This is on the 30-minute chart. If you got in on this wick that closed down here, then you would have to endure a little bit of drawdown over here. But again, this wick confirms your sell. And once you got that wick coming back into the zone, that's another position for a sell. 71 pips on that one. That was actually very nice and clean. Actually, GCAT acted very clean the whole week. Okay, that was on the 11th. Let's see on the 12th. This is what we got on the 12th. This is after the drop throughout the night. It kept dropping. Trapped it at the bottom over here. These nice little wicks over here speak of zones of rejection, you know, and then all the closings of these candles also speak to you where to put your body of your breakout line and then the retest line. Perhaps this could have been a little deeper. Looking back in retrospect, this could have been a little deeper. This is only 6 pips. And then perhaps you could have seen a clean retest because you're going to see how it didn't quite get there. The retest didn't quite get there. This is the break, again, of that little zone there. Again, had I did this just a little longer, we would have gotten that retest right there. This is the part of setting up these charts that's kind of art, right? I mean, there's the science and then there's the art. And for me, this spoke to me as far as creating that zone right there. But obviously, and I didn't know this was going to happen, right? So now once this happened, it speaks to me that the zone could have been a little lower down here and we could have caught that much cleaner. That's a retest. Again, it went back up just a little bit and then dropped. But we can't really call that a retest because it didn't hit there. What is much cleaner is the retest here at the S1 of the pivot point. It is a break of it and a retest of it and then a drop, okay? I did not count these. I could have counted these if I were to want to count this break and retest over here, but I just simply stayed with the 99 pips coming down with no retest. I didn't even count the rejection from up here. This is another 50 moving average rejection that we could have caught from the top of the zone, which also makes it really safe, by the way, guys. If you catch this sell from up here, this is a very safe entry because your exit, your stop loss is right above, right? Your stop loss is right up here with all of this as potential. So that's, again, as you're formulating your strategies, keep paying attention to that. We don't go into reversals because that's just kind of what it is. Price went up and then reversed. Although really the long term is an extension, right? It's just continuing the extension to the downside. This is just simply a flag. This is the drop, this is the flag, and then this is the drop down. But for purposes of the strategy, I think this would be more like a reversal. It came up to the zone and then reversed from there. But it is very clean here when you're using the 50 moving average. I just wanted to point that out to you. That's 99 pips, no retest on that one. Okay, that was on the 12th. Let's see what we got on the 13th. All of these setups, by the way, were on GCAD. Why did I do that? Well, because the true setups that I'm trading are GBP CAD and GBP USD. And GBP USD, it's a lot choppier. I mean, I know it pretty well. I did very well actually this week with GU. But for you guys, I think it would be too choppy. I mean, it moves. It goes down 20 and then it retraces up 10. You know, it drops 30 and then retraces 20. And all along is making lower lows and lower highs. But for a new trader, that could be disconcerting, right? Being 30 pips in profit and then only being 10. You know, that could throw you off. GCAD acts a lot smoother. So I've been sending GCAD, and I recommend all new traders to find their own pair that they stick with. But this is the one that I found that moves really smooth. And the fact that Jay's mentor, Kurt Cobain, this is his favorite, made me pay attention to it. And that's why I use it. And you might consider that also. On this one, the setup is pretty clean. It's been dropping for a while. Nice, clean trend line from the 4 hour. We have then that inner trend line because it broke away from the rest of the crowd and dropped down here. And now we're waiting for it. Ideally, what we get here is a break of this trend line and a climb to the next one. That's what we would like to see. And that's what usually happens when you have this break over here. Of course, we're ready if it continues to drop to the bottom. These wicks down here tells us it doesn't really want to go down, but we're ready either way. All right, and this is the result. And sure enough, it broke the trend line and went to the upside, and it ran right into the 50 moving average on the 1 hour, which coincides with the 61.8 of the golden zone. Next time, for next week, I'm going to incorporate the pips that reject from the 61.8 because we keep seeing it over and over. I use the replay here to stop it right here so I could just make it a clean chart. But again, this is one of those situations where when you run into something like this that is so clean with a 50 moving average coming down at the 61.8, come on, we got to take that sell, right? So this was 37 pips to the upside. Depending on when you took the retest, it was a 4 pip drawdown or so. So in other words, this is the breakout. This is the breakout. This is the retest. And actually, this is a zero drawdown. This is zero drawdown because the only drawdown that I count are the ones that go below the breakout line. And none of them came down below the breakout line. So it depends on where you entered here. You might have had a 4 pip drawdown, but I don't really count that as a drawdown when it's still within the zone. So that's a zero drawdown actually. So, but anyway, that was 37 pips with a nice retest, okay, to the upside. That was on the 13th. And then the last trade setup of the week, again on GCAD, again, adjusted trend lines, right? I think this remains the same. This one is adjusted. I adjusted this trend line because, let me see, actually because even though this wick is lower than this one, this close is lower than these. So this is the close. That's what matters, is the close, right? The wick can be important depending on where it stopped to show you area of demand in this case. But for the purposes of the trend line, which created the new low. This is the new low. This used to be the new low. And then it retraced up here. Oh, by the way, guys, this is that 61.8 that we're talking about. That 61.8, look how far it dropped, okay? When it hit the 50 moving average at the 61.8, look how far it dropped. That's a lot of pips. So we could make that. We're gonna start working on that as a strategy going forward. This right here, because again, I've been watching this for months now. And Jay has mentioned it. We just haven't formulated a strategy around it, but it's pretty clean. It's pretty clear that it happens very consistently. So this created the new low. So this is the new trend line. This is the new inner trend line. And again, it's acting very nicely with the 50 moving average. So as it breaks, we're looking for it to reach the next trend line. And these are the results, okay? This is what we got. We got a break of the 50. It climbed the 50. It climbed the breakout line. It climbed the trend line, and off it went, okay? The retest had occurred right there. As you can tell, somebody was asking me earlier in the week, do you wait for the retest candle to close? And do you wait for it to come all the way down to the bottom of this zone? And I said, yeah, and no. Preferably, we see it coming all the way down in here and then bounce back up. But like in this case, if you waited for that to happen, you would have not gotten it. If you waited for the candle to close before you entered on the retest, the candle closed way up here. It closed way up here. Not an ideal entry when this is the zone that it broke out of. Okay, it still went, but you can't count on that happening all the time. I mean, this is a structure of resistance here, another structure of resistance, and it could have just as easily as it did, it dropped here for a little bit, just as easily could have kept coming down. All right, so you always want to catch it in the zone. The retest, you always want to catch it in the zone. And so sometimes you have to enter a position up here because that's the wick that it's giving you. The wick is giving it to you right here, and endure the drawdown that goes down to the bottom of the zone, okay? Sometimes the best approach for that would be to enter half of a position. In other words, if you're used to entering a $10 lot size, you would put a $5 lot size here and watch it. And when it got here, if you got your wick, then you entered your other half position to the upside. But if it doesn't give you that wick, then you can close with a loss of only half of a position if it closes below here on the 15-minute. That's how I go about it, okay? So this setup gave us 111 pips with zero drawdown after the retest. Very nice, very nice, very nice. And that was the last one, as I said. That was a total of 5 setups, but only four that actually moved. Of those 4 trade setups, we got 5 trades for a total of 347 pips. That counts, but that comes out to 69 pips per trade. Okay, that exceeds our average of 50 and 52. 69 pips per trade, a total of 9 pip drawdown, because I just eliminated that other, I had 13 here, but I just eliminated that 4 pip drawdown because that was not a drawdown. So that's 9 pip drawdown, 1 trade that was which was a no retest. And what else did we get? And no false retest, not a single false retest. That's, again, I like GCAT, okay? Again, almost 350 pips on the weekly on only 4 setups, all right? 69 pips per trade. I think that is pretty fantastic. And I encourage every new trader to focus on the setups. Why try to figure out, you know, I was doing a one-on-one this week with someone and I asked them what pairs would they trade. They're brand new trader, and they're trading. They told me the pairs they're trading. I don't think any of them were, or one of them was a GBP pair. And I mentioned to this person how you're paying for training from 3 mentors who all trade GBP pairs. Perhaps you want to focus on the GBP pairs because the experts that you are following, that's what they trade. And so that's what I'm going to say to you. If you are paying for this service of being part of Trend Trading Academy, perhaps you want to do what your mentors are doing. I mean, I attribute all of my success in this to following exactly what Jay does. I just did exactly what Jay did. Believing that if he was getting the results that he was getting, then I could get the same results, and now I am. So I encourage everybody to do the same thing. Let's stop this share, and let's go to the next screen, where then we'll discuss the projections for the coming week. I only have 3 projections. Let's go with GCAT. This is a bigger picture on GCAT, okay? We've been watching this happen for quite a while. This has been in this range since when? Let's see, since about 2017, it has been on this range, right? It has now reached the top of that range, which is a very strong area of supply, very strong, okay? It hits, drops, it crossed a little bit, but came back down, dropped again, came back up, dropped again, came back up. Now, what you do want to notice on these right here, though, is a low, a higher low, a higher low, okay? It's not creating higher highs, but it's creating higher lows. What does that mean? It's wedging in here, okay? This pressure is going to continue to build until it breaks to the downside or to the upside. You know, we don't really know. We don't really anticipate or predict that it's going to, because it's wedging up, that it's going to break to the upside. No, it's wedging, period. That's all we are paying attention to. And it could break to the downside or to the upside. Something dramatic is going to happen as it gets closer and closer here. Okay, this is the weekly. It's over the 50 moving average. Look what it's doing on the daily. The same thing. It's also above the 50 moving average. So it is bullish. Okay, GBP CAD is bullish, but it is up against a zone of supply. So just be aware of that. All right. And then GBP USD was quite a dramatic break. This trend line has been respected since 2018. This zone right here has also been respected since September of 2018. It's up against it, but we have a break of the trend line. It closed above it and it retested it, and it now pushing again up. This is bullish, guys. This is bullish. All of this is bullish. This right here flagging right now is bullish. It could perhaps bounce here a couple of times, creating a bullish flag. You know, it could create something like this. Let me see if I can do this real quick for you guys. It could create something like this, you know, before it does the break again, perhaps only to run into this again. But my point is that it is bullish. So keep an eye on GBP USD to continue to have a reaction at this trend line when it's playing up. But again, I'm looking at this as a break. This is coming as a break. GBP gave way to USD for quite a long time, you know, for quite a long time, and also after Brexit, all of this, and it's been trying to come back. It is finally broken above the trend line, and it looks bullish for a break. Now, if it breaks here, this is major. Okay, this is the major zone. If it breaks there, we're looking at the next structure somewhere up here, 150, and to the top of that wick, which it will try to fill that wick, guys. It will try. You can mark that. You can write it down. Robert said it's going to try to fill this wick. It will try to fill that wick. So it's 150 right here to the structure, to this structure right here, and then to the wick, almost 320 pips. So I'm going to be looking forward to that. Okay, that's GBP USD, bullish. And lastly, GN. We've watched this develop for quite a long time. We've been watching this happen for quite a bit, and with a lot of interest, right? This has been a channel that has been in since 2016. As I mentioned last week, I missed out on this move. Oh, I was in here, but I closed my positions as I was struggling to keep moving up. I closed my positions with wins, you know, but still I missed out. This was like 800 and some, and I've been waiting for the break of the 50. It now broke the 50, and it closed above the 50 moving average, and we're looking now at a potential 350 pip move to the next structure, but it's gonna probably retest this 50 moving average. Let me see what it looks like. This is the bigger picture. It's already above the 50 on the daily. It is quite extended from the 50 at this point. You know, this is that alligator look that we want to see with the moving averages as it's pushing up. This is very nice, but it is likely, given that it is at another structure. You see this structure over here? Let me see if I can do this real quick. I should have done this already so you guys could have seen it. Okay, there's another structure right there. All right, right here, boom, stopped. It came below it, respected it, jumped up back from it from here, came down, respected it down, it's at that point, okay? That's where it's at. That's another structure right there. So I'm expecting that it's going to retest the bottom of that structure, okay? And then make its push either to the upside or to the downside, okay? It could break down from there again. It is at a level of resistance, right? So it could drop from there a little bit. But if it breaks that, we're looking at 350 to the upside. That's it, guys. I'm not going to do the GBP odd because, again, Joe has one on that. And as I mentioned before, I don't do GBP JPY because it is too similar to GU. If you like GBP JPY, just look at the analysis from GU and then compare it to the GJ. And you're going to see a lot of similarities. And you could actually trade both. I'm much more accustomed now to GU and how it moves, so I'm going to stick with it. Again, this is Robert Rivera with Trend Trading Academy. I hope that you guys got benefit from this. And if you have any input of things that you would like to see in the weekly recap, please do not hesitate to let me know, as I would like to continue to create value for you guys. All right, take care. God bless you.